Order by aviation regulator DGCA, which has gone ahead and removed airfare bans which capped airfares within limits, the upper and the lower limit. The order will come into effect from August 31st. This means that airfares will now be driven by market forces, meaning demand, as well as factors like air turbine fuel prices, which makes up a big part of the airfare, will determine how much you're charged. Remember, airfare limits were imposed in May 2020 amidst the pandemic. The upper limit was put into place, ensuring there was no big spike in fares and to protect passengers from being charged exorbitant rates. The lower limit was to ensure that there was no undercutting by airlines, as the sector was facing tremendous losses due to the pandemic and lockdown. This also means airlines will now be free to charge fares as per their discretion. Does this mean airfares are going to rise much more? My colleague Samir Dikshit filed this report earlier today.
Yes, definitely. Currently what we see that the airlines were reeling under the high operational cost. We know that this ATF, the turbine fuel cost near to 50% of any airline's operational cost, and seeking the high ATF prices, which are close to 1,30,000 as of now per kiloliter. And that was the reason that the airlines were continuously requesting the government to provide some immediate relief, to provide some sort of a step that will help airlines to continue in a smooth operation. And in the same direction, now the aviation regulator has come up with the order which states that the airfare bans will be removed from August 31st. Now, regarding the airfare ban, this was a decision that was introduced by the DGCA on September 2021, which states that for a period of 15 days, there has to be a minimum as well as the maximum fare limit that will be decided by the airline. And beyond that, beyond the maximum limit, the fares couldn't be charged, and beyond a minimum limit, the fares couldn't be charged. But now with the latest development, airlines are free to charge any airfare, but majorly these fares will be decided by the market forces, and in these market forces, ATF will be the biggest factor. We know that if the ATF prices will decline, will soften in coming time, then the airfares may go down. But what we anticipate that currently the airfares are likely to go up. That will pinch the common man, the airfares. But yes, if the ATF prices will reduce, that will also help the airlines to reduce the airfares in coming time. But that is the latest and the big development that is coming in from the aviation sector, that the DGCA, the aviation regulator, has removed the airfare bans that will come into effect from August 31st.
So from August 31st, we go back to the previous dispensation, and airfares can be driven by market forces, but we have seen airfares rise consistently, nevertheless, over the last few weeks. Jitendra Bhargava, former ED Air India, joining us on the show. I'm also speaking with Sathyanarayan Sridhar, team lead at CAPA India. Welcome to both of you. Thank you so much for speaking with us today on the show. Mr. Bhargava, just your take on what we're going to see as the impact of airfares. And of course, this is a much needed reprieve for the industry, isn't it?
It is a much needed reprieve because you must get back into the history. Pre-COVID, there was nothing like a fare ban existing. The government brought in fare ban essentially because the capacity induction was taking place in a calibrated manner. It was not that all airlines were given the freedom to mount as many capacity flights as they wanted. The government said 30%, then gradually increased to 50, 70, and then it got down to 100. So there was a rationale behind it, and it was needed that time. But it had outlived its utility. You see, the general apprehension that since this has been removed, there will be a major spurt in fares, because as you said in your introductory remark, that airlines will be free to charge at their discretion. If airlines had that freedom to charge fares at their discretion, no airline would have collapsed, no airline would be losing money. The reality of Indian market is that fares are truly market driven. You cannot fix fare. The competition is so intense that every airline is seeking to protect its market share or trying to be ambitious to garner additional market share. And in their quest to do so, they lower the fare, offer fare that can attract the passengers. As we have seen between the May traffic and the July traffic has been significantly lower than May, only because the fares were higher than what they were existing in May. But that was essentially because the ATF prices had gotten up very high, which accounts to, as your correspondent very rightly said, 40 to 45% of the total operational cost.
Right.
Now, with the fares being high, a certain segment hasn't traveled. The load factors on all airlines across the board have been 80% or less in the month of July. So which means 20% seats have gone vacant. Seats are a perishable commodity. So this relief was needed. Let the market decide what they can get onto it. And the general perception that, look, airlines are fleecing the passengers or they're charging arbitrary fares is really not true. Because if it was so, Indigo, India's most profitable airline, wouldn't have reported a loss of 1,200 crores for the quarter April, June 2022. And other listed airlines, when they declare the results in the coming days, will report similar losses.
I mean, that's a question of perception, very rightly said, but are all those losses because of undercutting is then a story for a different day. But I just want to read out what Mr. Jyotiraditya Scindia, the Civil Aviation Minister, tweeted earlier today on this decision. He said the decision to remove airfare caps has been taken after careful analysis of daily demand and prices of air turbine fuel. Stabilization has set in and we are certain that the sector is poised for growth in domestic traffic in the near future. He says stabilization has set in. How do you read that, Mr. Sridhar? Is the understanding that, airlines are in no hurry to start raising fares very, substantially because the cap is lifted?
First of all, it's a welcome decision from our end, and I also agree with Mr. Bhargava that it has been long overdue from the market perspective. And to be true, one of the this thing that we need to be aware of is the timing when the fare caps have been removed. It's generally it's the Q2 is the one of the lean quarters for the airlines. So and also the demand for Q2 has been it's actually 20% lower than what it was pre-COVID. So we are expecting some level of yield dilution to happen in the market, while we are hoping that the airlines don't do that because, as we all know, they have lost around $7 billion in FY21 and 22. And given the high fuel price and the currency depreciation, we are expecting around $1.5 billion loss in FY23 across all the airlines. So given this, we are hoping that the airlines do maintain, a price discipline and actually take advantage of this thing and keep not as high as it has been, but not to resort to a low fare or a loss leader kind of a scenario.
Okay. It also bodes well, of course, for the fact that Akasa is launching when these caps are out of the way. I want to understand, Mr. Bhargav, that since the lower cap is also out, we're just thinking about it from the passenger's point of view that will they have to pay more? Now, all of these new entrants and in this season which comes, they all have the capability of triggering a price war as well, isn't it?
Price war will come in if there are passengers chasing seats. The reality of Indian market currently is that seats are seeking passengers, please come. So airlines are being compelled to offer fares which are reasonable and attractive or affordable from the customer perspective. Now, this affordable term, if you recall, in the earlier program that we had with you, Akasa Airline had announced that their fares would be 6% lower than the other airlines as introductory fares. You know what is the current state? Indigo's fare on the Mumbai-Ahmedabad sector is 1 rupee higher than Akasa Airline. So which means Indigo has lowered its fare to match the Akasa thing. So it is not the other way that we're looking at. And as we said, Indigo's fleet has expanded from 275 to 281. Akasa is inducting aircraft. Once the capacity induction takes place, and there are not too many passengers in the market, load factors are not beyond 80%, 85%. Airlines are in no position to charge fare on what they think is reasonable or even for recovery of the cost of producing a seat. It's a difficult time for the industry. So it's a welcome relief that the government has taken note of. Whatever little help that the aviation industry can get has been extended, and this does not cost the government anything.
If you're saying they don't have the ability to increase fares because there isn't that much demand, they're not going to have a price war because there isn't that much demand, then how is it a welcome relief? It's not really making any real difference, is it?
That's why I said marginal relief. Whatever airlines think they've got it, they have got it. But it's not that immediate thing. Maybe by Diwali time, the load factors go up, more people travel, flights are full, and you're doing 85, 90%. So they are in a position to charge higher fares at that time, but still will not be able to recover the cost of a flight because the ATF prices have compelled the airlines to raise fares by a certain level, but having a direct impact on the number of passengers traveling by air. So with the result, it's a difficult situation for the airline. That's where I said a welcome relief to whatever gain can accrue to the airlines will take place.
That's the real story, that the airfare hike that people are wondering about may happen post-Diwali when the demand really jumps up. That's all the time I have, but I want to thank both of you for joining us on the lead story this evening.
Thank you.
Thank you.